Hey, what's up guys, John here. New home sales tank.
New home sales data, and we take a look at the numbers.
590,000 from a slightly revised 672,000 means this number's down over 12%.
At the same exact time, mortgage rates fall.
Mortgage rates have made a sharp U-turn in recent days.
The rate on a typical fixed 30-year loan is now 6.8%.
Doesn't make any sense. People think, and people told us that when mortgage rates start to fall, even a quarter point, a half point, you're going to start to see a lot more activity. And it's just not the case. Home buyers are looking out at the economy saying, you know what, I'm better off to wait. 6 months ago, a year and a half ago, people were waiving their contingencies on inspections, on appraisals. They would pay $50,000, $100,000 over asking price. They were buying properties on Zoom. Now, that market is well behind us. But when you look at what's going on right now inside of the housing market, and you look at what Warren Buffett did, he made a massive bet on D.R. Horton, which is America's largest home builder, on Lennar, the second largest home builder.
Warren Buffett's Berkshire Hathaway unveiling a big bet on U.S. home builders. New positions in D.R. Horton, NVR, and Lennar, together worth more than $800 million US.
Betting almost $1 billion on one specific scenario unfolding in our housing market. It looks like that's what's happening right now. And in this video, I'm going to break it down for you and show you exactly what's going on, because I believe home sellers by the millions are about to get massively rug pulled. Take a look at this. Please hit the like button. Hit the like button. YouTube will share this content to educate other people about what's going on. And if you'd like to fix your credit to position yourself for what I think is going to be the greatest real estate investing opportunity in American history, you're going to want great credit so you can get funding. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Take a look at this. So, new home sales, 590,000. They expected 690,000, right? So home sales are falling for new construction. U.S. new home sales unexpectedly slump to a new one-year low. Contract signings declined 12.1% in November to 590,000 rate. Purchases in the South, largest U.S. region, decreased almost 21%, 20.9%, right? Well, look at this. In mid-October, mortgage rates on a 30-year fixed, you're looking 8.25%, 8.5%, substantial, right? Now it's 7.5%, 7.5%. And what are you seeing? As rates are falling, home inventory is actually increasing for existing homes. You might wonder why. Why is that happening? Well, it's not the buyers running out there looking to take advantage of these low rates. It's the sellers hoping buyers will come out there to buy these overpriced properties. That's why if you look in November and December, why is there more home inventory in these 2 months than June, July, and August of 2022 and 2021? Why is that? Well, it's because home sellers are looking to try to get out from underneath this market before it falls on them. Now, when you look at what is happening with new home sales, they sink to the lowest level in 2013. I personally think that we're going to start to see this start to pick up, actually. And this is for the reason Warren Buffett's betting on. Why did Warren Buffett, Berkshire Hathaway, buy home builder stocks, right? And you go on, it'll show you his portfolio. But you look at this, and it's so clear. It's so clear what's happening with these home builders. So right now, home builders are building a lot more. Housing starts really started to skyrocket in December. They're getting more aggressive right now, even though home sales are down for new construction. You have to ask yourself why. Well, even a burst in new home construction isn't enough to solve the nation's housing crisis. Home buyers have had a bad year. Between mortgage rates peaked at 8% in late October, high home prices, and extremely low levels of supply, it has been exceedingly difficult and unaffordable for many people to break into the housing market. But there are small glimmers of hope going into 2024. For one, housing starts spike in November to a 6-month high, right? Now, when you look at this, it seems like a really good thing. Home inventory is skyrocketing for new existing properties, right? They're really trying to build a lot more housing units. But supply and demand are going to have an impact on price. If you start to see a ton of homes come on the market, right now there's 1.143 million single-family homes, which is a 12.9% above the revised figure. You start to look at how much inventory is going to come on the market, you're going to see a situation where, home buyers are going to look for a better option. They're going to really pay careful attention to what they can get for their money. And when you look at what home builders are doing to attract these customers from existing homes, it's pretty shocking. Like, for example, right now, mortgage rates are 7.5%, but Lennar is offering a mortgage rate of 3.99% for a 30-year loan, fixed for 30 years, 3.99%. Now, if you're a home buyer, which property are you going to buy? Are you going to buy a property with a 7.5% mortgage rate or one for a 3.99% mortgage rate? Probably for the 3.99%. Now, when you look at the difference on a $430,000 purchase price, which is the average home price in America, it's pretty shocking because this figure with a 6% down payment, which that's the average down payment for a U.S. home buyer is 6%. It's not 20%. First-time buyers, 6%. Second home buyers, somewhere between 11 to 13%. So with a 3.99% mortgage from a Lennar, it's $2,485 a month. It's not bad. It's really not bad at all, considering that the average apartment in America is probably $1,800 to $2,000. You can go own your own property. You can get tax deductions, own something, have an investment. It's a good deal, right? It's a good deal. But when you look at the same deal at 7.5%, you go from $2,485 to $3,384. So nearly $1,000 more every single month to buy a pre-existing home. Now you have to ask yourself, what happens if the economy starts to get worse? And a lot of people that have 2% mortgage rates, 3% mortgage rates cannot hold on to the mortgage. Because sure, you can have a 1% mortgage rate, but at the end of the day, that mortgage rate is only as good as the homeowner's ability to actually pay on it. And so if they can't pay, then what's going to happen? They're going to have a harder time selling that property. They're going to have a harder time selling it. They're going to have a harder time refinancing it because they're not going to have equity in the property. They're going to have a harder time getting a home equity line of credit. They're going to start giving the keys back. And so when you look at what Warren Buffett did, it's so smart, it's so calculated, because he knows that these home builders, it's not just going to be, the Lennars of the world. It's going to be many home builders. Right here, mortgage rates, buy downs, home buyers are now all the rage, prop up sales, lower effective home prices. Want a lower mortgage rate? Look for new construction. This is what they're doing. They're completely undercutting the entire U.S. housing market. But it gets even better than that, because one of the big problems, property insurance. If you live in Los Angeles, if you live in Florida and along the coast, if you live in Texas, if you live in many of these desirable locations, insurance is through the roof. It's more expensive to insure these properties. It's a lot more expensive compared to new construction. If you were to buy new construction, right here, new construction, cheaper to insure than older homes. Bankrate.com, new construction, generally lower insurance rates. Policy Genius, right here, National General offers the cheapest home insurance rates in new homes. New construction, homeowners insurance is typically cheaper. So you think about this. If you can save $1,000 a month on just your mortgage payment, and you save an extra $100 a month on insurance, $1,100 a month, and a lot of these new homes come with solar, and they have these other incentives. You have to look at this from the perspective of a home buyer. Home buyers are going to start shopping for new construction. But Lennar gets even one step above the traditional housing market, because what they're doing is they're building a lot of these micro homes for $130,000, $150,000, $160,000. Very, very tiny little homes. But if you're a renter and you're renting for $1,500, $1,800, $2,000, and you see a home for, let's say, $200,000 or $160,000 is what they were selling those 2 bedrooms for, and they're offering it for a 4% mortgage rate, it's less than renting, right? So you're going to start to see all of these buyers start to move into new construction. And it's just so well timed. It's so well timed when you look at what's happening with the job market. You look at what's happening with interest rates. You look at all the headwinds that are impacting homeowners and home buyers. And then you see exactly what's happening with new construction and some of the deep-pocketed investors that are backing a lot of these home builders. It's positioning these home builders to just simply take over the housing market. And that's why I believe we're going to see a situation coming forward in 2024 where home builders are going to keep building and building and building and building, because they want to borrow as much money as possible to get out of fiat currency and build out tons of assets that are going to produce yields, that are going to produce income. A lot of these are also going to become rentals. And Lennar was really big in the built-to-rent space. You're going to just see so much competition coming from new construction. And I think a lot of home sellers are going to have a lot of challenges ahead trying to find home buyers that are going to want to buy a property at a much higher interest rate, pay more for insurance, and then also pay more for upkeep. What do you think about this entire situation? Do you think we're walking into a scenario where Warren Buffett is hitting this one right on the head, and he's going to make a complete fortune on this situation. That's what I'm betting on. I personally believe Warren Buffett is going to do extremely well on this investment. And I think a lot of home sellers are already underwater given the fact of what's happened so far in this housing market. 2021, you could buy a property, almost do nothing to it, list it the next day, sell it for a profit, sell it multiple offers. That market is long behind us, and the home buyers that were there are no longer. Now everyone that's looking to invest in real estate is looking for a value. They're looking for a deal. They're looking to buy something that makes a lot of sense, which to me is probably going to be new construction in the next year or so. What do you think? Drop below. Hit the like button. And if you like to fix your credit to position yourself, what I think is going to be a massive, massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. We just hired 2 new employees that used to work at Equifax that was handling disputing directly. So if you have any specific situation, maybe a complex situation, book a call below and we can hop on a call, see how we can help you. Catch you in the next video.